Welcome to another episode of the Tech Hour with Kevin and Pat. My name is Kevin, and today we are going to be talking about the different types of businesses and which ones to start. So we're going to be talking about the differences between sole proprietorships and incorporations. We're going to kind of break down the two of them, give the pros and cons of both, the ins and outs of them essentially, just to help you decide which one would be best for you in your business. Okay, so the first kind of business is a sole proprietorship. Sole proprietorships are essentially yourself doing business as a business name or a brand name, essentially. So for example, my business is Kevin. Kevin LeBlanc would be my name. Doing business as KPS Home Automation. So legally, when I'm doing taxes, it is done under my name. So that's essentially everything is under your name. If the income the business makes during the year or during any fiscal quarters would essentially be considered your own personal income. Let's say you make $100,000 a year. You as an individual have made $30,000 or $100,000 that year. The other key part of a sole proprietorship would be the liability aspect of it. So essentially when you're doing business as yourself or self-employed, there's a whole bunch of liability involved, especially if you're doing a service business. There's a lot of liability to take into consideration. So be very, very careful when choosing your business model. Definitely take that into consideration. For the most part, that is the biggest deciding factor for most people. Okay, and now to the second part of the video, we are going to talk about what a corporation or being incorporated is as a business. So essentially being incorporated means that your business name, so again I'm going to use mine for example, KPS is the business. You are going to be an employee of that business, so essentially you're going to be the CEO or CFO or CTO, whatever you want to be called. Essentially you are going to be working for yourself, but you are essentially going to be working for your business. So you're going to be an employee, you're going to be essentially pulling, weekly or bi-weekly paychecks. So you're essentially going to get all the benefits that a regular employee would get. So again, I said, if you're in Canada, you'd be getting your GST taken off, HST taken off. If you're in the US, essentially the same thing. So you get your taxes taken off your paychecks. You get a weekly, bi-weekly paycheck. Benefits if you're entitled to them, that sort of thing. The big portion of this, or the big deciding factor on this, and this is what essentially breaks the ice in between the two of these here. So a sole proprietorship and the incorporation, you're actually pretty much fully protected when it comes to liability. So essentially if somebody goes after your business for whatever the case may be, they're going after the business because the business is its own entity. They will not go after you since you are an employee of that business. So essentially, let's say your assets, so your house, your car, your money, anything like that, they cannot touch that since it is your own personal assets and not the business assets. So between the two of these, again, if you're doing anything service-based or anything, risky, so let's say you're an electrician, construction worker, you work with gas or propane or anything like that, even something simple like we do, like smart home automation, things of that nature, just incorporate yourself. It'll save you a bunch of headaches for the foreseeable future, as opposed to being a sole proprietorship where you have to have that thought in your back of your head for pretty much every job that you're doing. You're going to be like, okay, I got to be careful here. Okay, so with that being said, our recommendation, and again, we're not financial advisors, we're not tax accountants or nothing like that, but with that being said, highly recommend looking into incorporating your business. Again, I said it'll save you a bunch of time and essentially could cost you a lot less than what it would if anything were to happen doing business. So it would save you a bunch of time and money. incorporating, getting that out of the way. You don't have to worry about any liability implications or things of that nature. Incorporations actually do have a lot more tax write-offs than sole proprietors do. So there are quite a bit of advantages to being incorporated. So with that being said, thank you for watching. If you have any questions, please leave them down in the comment section below. My name is Kevin. Make sure to subscribe and to like this video and possibly help us to help somebody new. Thank you for watching. See you in the next one.